It's Market Day Report. All right, let's jump into the markets. We've lost our four handle on corn. Front month now is definitely in the red as we've fallen a nickel, make that 4 3/4 cents. As soon as I said it, popped up back to $4 on that December contract, but we've been as low as $3.99 in the morning trade. Soybeans, we've lost the 10 handle on 3 of the contracts. November, the front month at 9.71 1/4. It's off 8 3/4. Now, wheat overnight was lower in Chicago, Kansas City, but higher in Minneapolis. And here this morning, we're lower on Chicago, December at 5.78 3/4, down 6 1/4 cents. Hard red, or Kansas City, down 4 3/4, 5.84. New crop July 6.15, it's down 6 cents. And in Minneapolis, we're lower through the May contract, while July and September are moving higher. And in New York, cotton futures have been lower and continue to stay there, 70.77 on the December. It's off 49 points. Ted Seifried's with Zaner Ag Hedge. All right, Ted, some flash sales overnight for corn, and that follows some flash sales the night before for corn and soybeans. Doesn't seem like it's helping the market much.
Yeah, the big number that we saw yesterday, I think, helped for a moment, right? We had a nice little bounce in corn yesterday, but what it ended up being was just an inside trading day. Like we didn't get out of the range from Tuesday, and that's really disappointing for better than 1.5 million metric tons on a daily flash sale, and then follow up with almost 200,000 metric tons today, also to Mexico. It's not helping the market, and to me, that just says we're in a time frame where harvest pressure is the biggest thing. I keep telling people in conversations every day that it's okay to be bullish corn longer term, but it's misplaced to be doing it right now. There's a lot of cash bushels that are hitting the market and putting pressure on corn. And the problem with it, and the reason why the market doesn't react to the idea that, hey, we need almost a 184 national average yield to get just under a 2 billion bushel carryover. We're probably going to need some more acres for corn next year. The reason why the market doesn't want to react to that yet is because by the time we are able to trade that or get into the acreage talk, things could change globally. Things can change from a macroeconomic demand perspective. So for right now, the focus has to be South American weather getting better, thinking that second season corn crop's going to get in on time and have good prospects, and the fact that we have harvest going full swing right now, and there's a lot of cash bushels coming to town. I mean, it's been talked about a lot. Producers have been very undersold coming into this harvest. So it's just what it is. You can say that we are starting to get oversold in a lot of these markets. Soybeans are at 30% on the relative strength index. So the hope is that we could maybe bounce there at some point. But the scary thought is that the funds had gotten flat, basically, in the grains markets. And with the dollar streaking, just day after day going higher, and to the point where it's back to the levels that we saw in July, which was a key support level. Now it was resistance. We're through it today. With that dollar being higher, it's just adding more and more incentive for the funds to get back short these markets. And while the charts technically break down in the grains, that's just throwing fuel on the fire there, Tony. So it's just not a good look at the moment. We're oversold. That's about the best thing I can say, right at this second.
All right. Hang on. We're going to come back and talk livestock futures with Ted Seifried. Market Day Report continues in a moment. This is Market Day Report, and we're mid-morning. Let's look at that dollar index. And before the break, Ted Seifried with Zaner Ag Hedge was talking about how the dollar just continues to appreciate day after day after day. And here we are at 103.62 on the December, up 22. Let's roll in now to live cattle before we bring Ted back in. October trying to find its way to converge with cash at 186.77. It's off 27 in the morning session. December unchanged at 186.60. And for the feeders here this morning, $1.10 higher on October. November most active at 246.45, up 95. And the hog trade has been higher December up 65, 78.35. Let's bring Ted Seifried back in with Zaner Ag Hedge. Okay, we've set the table for you. Where are you going?
You know, look, it's been a really nice rally in the cattle complex after putting our lows in there for August and September. We had a double bottom. We rallied into the end of the summer and sort of an Indian summer, an extended grilling season. But now we've got a weather pattern that seems to be changing or is in the process of doing so. You've got a stock market that looks a little bit less optimistic than what we had been looking at a couple of weeks ago. You have that dollar, like we talked about, streaking to highs. And so all those things make me nervous about what we're going to see going forward in the cattle complex. The feeders had not been the leaders to the upside. It had really been more of a live cattle-led rally. That's also a concern. So for the last 3 days, we've been sitting here holding our 20-day moving average, kind of pausing and consolidating. We've not been able to come back up and go test those highs just yet. We may do that, but I'm more worried that there could be a deeper correction coming for this market, Tony. It is seasonally the time to do something like that. We're in a sort of lull of peak demand between the end of grilling season and the beginning of the holidays. I think producers really need to be doing things or looking at things to help protect their downside for the moment.
And, I just kind of wonder with somebody like Warren Buffett pulling some money off of the table and just sticking it in cash, could we maybe have to wait until after the election to figure out where that money's going to go?
Well, so, Tony, that was kind of the crux of the point of talking about what the dollar's doing. You can see that dollar gaining value every day. So going into cash, I mean, that's what it's telling you to do. Look, there's a lot of reasons to not want a lot of risk at the moment. Look at the global macroeconomic perspective, the global unrest. I mean, there's stuff going on in so many places. Cash is king. Like it's a flight to safety, and it makes sense. Traditionally, we think the economy is going to be great going into elections. I think we've done that. But now I think we're starting to see more of the true colors. I just feel the want to be in cash. And yeah, I think that might take till even possibly the after the first of the year before we see big investment coming back in once we settle the election, see what's going on with the rest of the world, and go from there.
Yeah, dollar again trading 103.60. And it's up 20 at last check. Ted Seifried's with Zaner Ag Hedge. Ted, thanks for popping in, and we'll actually talk to him on the radio tomorrow for Commodity Wrap on Rural Radio 147.